So here we go, let's talk about it. Is there potentially a 2024 stock market crash on its way? Well, Friday was an ugly day, wasn't it? DraftKings, my biggest position, down 2.6%. HIMS, down 4.3%. PayPal, down 1.8%. Those are my three largest positions in the stock market, and they were down quite a fair bit. So for me, on Friday, it was a ugly day. My account was down at least 2%, so it definitely felt it on Friday. Obviously, Monday, I don't have the pre-market data just yet, so we'll see how the market reacts after the weekend news. But obviously, there's been a lot going on over the weekend, and we'll see what potentially that could mean as an impact into the stock market. Before we do that, just a shout out, if you're on the Patreon, I dropped an exclusive video on there over the weekend, which was a stock request. This is where members of the Discord get to vote for me to take a look at a stock. We had a look at Phoenix Group, and I gave my thoughts on Phoenix Group. So if you do want to see 2 exclusive videos every week from me, then join the Patreon. Link is in the description. Only £5 a month. You get those 2 exclusive videos a week. You get my live buy and sell alerts, and also you get a Discord with 500 members on to talk about stocks, including me. So if you do want to support the channel, only £5 a month, the price of a pint basically. Why you're not on there yet? And if you want some free shares, join Trading 2 and 2 with a link in the description as well. Get a free share worth up to £100. So let's focus on what's going on out there at the moment. Obviously, Israel-Palestine situation, we've had that for quite a few months now. I think that really escalated during October time. What has escalated it even more is the whole Iran and Israel situation now. So Iran and Israel are now getting quite aggressive with each other. I won't go too into this because I know it's a sensitive subject. I know people have different opinions on this sort of situation, and I won't get involved in that today. What I will say is that what I always say is that in 2024, I still can't believe we have these situations, these war situations that go on. There's no winners during this situation. All that it leads is to death, unnecessary death, and it shouldn't happen. It should not happen in 2024. And the fact that it still happens in 2024 is absolutely shocking to me to see that still happens anyway. But basically, the brief kind of end of it is that Israel ended up bombing a military commander from Iran. Iran obviously are going to retaliate to that, and obviously fired a few missiles at Israel. I say a few missiles, I think it was 300 and something missiles at Israel over the weekend, and I think most of them were actually taken out by the defence system. I think the US and the UK were involved, which I still to this day don't know why we as a country get involved in a lot of these situations, but I'm not getting involved in it. But I think most of the missiles were shot down. I think most of them were for military bases. I think most of the actual missiles and drones were actually shot down. I think there was only one person injured in it, which I think was a young girl that was injured during it. So we'll see if Israel now go and retaliate to Iran's actions, but I don't know why Israel do think they're allowed to go around bombing people and killing people from Iran and not think they're going to get some retaliation from it. Anyway, like I said, I'm not going to get too into the detail from it, but obviously there's escalation going on now between obviously the Israel-Palestine and obviously Iran are now involved in this whole situation. Now, the big thing is that situations like this, we've had world war situations. So something like this that's going on isn't as big as, say, a world war out there. But we've seen plenty of these things happen before where there's escalations between countries. And what will happen is that over a long period of time, whatever will happen, whatever dip is caused by this sort of situation, the stock market will recover. The stock market recovers 100% of the times. And you look through some of the serious events that have happened during the stock market lifetime, if you ever look through some of the events that happened during the S&P's lifetime, the S&P recovers all of the times. You know, whether it be world wars, 9/11, obviously some of you guys that have been recent investors, you've gone through some big events. You've gone through the whole Russia-Ukraine situation, which I was going to point out. You guys have been through that situation now. Obviously the start of the Israel-Palestine conflict, which obviously was around October time, whether it be the coronavirus, the trade war, the 2022 stock market crash, the financial crisis. There's been so many events that have happened during this stock market time frame, and the stock market recovers it 100% of the time. So whatever happens, all you need to know is that you need to be thinking long term, because in the long term, 3, 4, 5 years down the line, it's probably going to be something that the stock market does recover from. So this is why it's really important to be in the long-term investing game, because events like this don't really affect you that much. And if anything, sometimes they can actually create buying opportunities. You know, you look during all these major issues, and even though they've been horrible situations, there have been buying opportunities in the stock market. A simple point of view would be look at the last two major events that we've had in the stock market, whether you go through the whole COVID situation, if you go through the whole 2022 Ukraine-Russia situation and the energy crisis that caused, they were all buying opportunities. And anyone that bought in those opportunities would actually have made money during that time frame. And that's the key thing that you always want to be looking at. But realistically, the main reason why I think that this sort of situation here might actually cause a dip is that not because we'll see a company's recession caused by it, we'll see major companies affected by it. I don't think that this situation will cause much disruption in like the US economy, for example. The biggest thing that I think that this will cause is just generally that we have been on such a good run. And I think that the market will be looking for some reason for us to have a cooling off phase. And right now, you know, we're up 8, well, we were actually up 10% year to date. That's one of the best stock market starts to the year that we've ever had. And when you're up that much, people do start to look for reasons to sell. And the thing is that you start running out of buyers. You know, when you look at the stocks that are up this much, when you have like, let's say DraftKings, for example, at $44, you start running out of buyers. You know, a lot of people that want to get into this stock, for example, have been buying during $10, $12, $15, $18, $20, $25. A lot of people have bought in. So you start running out of buyers. There's a lot of money already allocated into the market. And at this sort of point, people are kind of looking for a little bit of a weakness to go, you know what, I'm up so much on this position. I'm going to take a little bit of profit. And something like this is a perfect reason why people kind of go, oh, you know what, I'm going to take a little bit of profit here. And you'll notice that whenever we have these big dips in the stock market, when the big dips happen over the major events, a lot of them are because we've run up so much. When you look at the 2022 crash that happened because of the Russia-Ukraine situation, we had an insane 2021, 2020. The market was up a lot. So we were already up a lot and people were looking for reasons to take profit and valuations were stretched. If you look at 2019, cracking year in the market, we had the COVID situation and that caused a big impact. Obviously, it would have probably dropped anyway. I'm not saying it wouldn't have dropped anyway, but we were already up a lot. So the market also needed to have a bit of a cooling off phase. If you look at the trade war situation, 2017 was an absolute brilliant year in the market and people were looking for a reason for it to drop. And sometimes there's people wishing for an event to also place on, let's have a bit of a healthy correction in the market. And sometimes that also adds into, okay, yep, this is a little bit worrying, but also look at the valuations we're at. Nobody wants to kind of buy at these sort of levels. There's people that have been sat on the sidelines that have missed out on the total rally in the last year. And some of these bears that are in the market, and sometimes you might see them in the YouTube comments, they've been sat on the sidelines going, oh yeah, the market isn't going to rally during 2023, and then it goes up 23% and they go, oh crap. and so they needed a reason to go, the market's going down, it's going to go down, because they want to be proven right. Okay, it's dropped 3-4%. I told you the market was going to go down. Now I can go put the money in. So there's all that kind of building on the sidelines as well. You look at the valuations of the S&P 500. It is the highest it's been since the last kind of 2000 and however long this chart is, 2006 maybe. So since about 2006, the S&P 500 valuations are the highest it's ever been, apart from the 2021 situation. And what happened there? Well, then we started to have the market correct. So we are at valuations that are very good, really high valuations at the moment. And I've said for a while that we need to have a cooling off phase. Now this might be the headline that's created for us to have that cooling off phase or for us to have the pullback. So this is really good for the market. This is good for the market to have a cooling off phase, because if we keep going up and up and up, what's going to happen is we're going to be at historic highs, very high valuations. And when we do have that correction, look at the correction there, it's a lot more aggressive. So this could have some impact for the market, but also it's a reason for the market to have a cooling off phase, and it needs a reason to have a cooling off phase. And that's probably why you're going to see some impact on the market because of that. Now, the biggest thing that's probably potentially going to be the biggest impact into the stock market is this: oil. Obviously, Iran produce a lot of oil. If you look here, it says that 4% of the world's oil does come from Iran. So this is probably the big thing that we're going to be looking at is the oil situation. Are oil prices going to go up? Now, the big reasons why we're looking at if oil prices are going to be going up, and also the whole oil that's produced from the Middle East as well is probably worth pointing out, is inflation. Inflation at the moment is looking a bit sticky. And one of the big reasons of inflation, why it goes up, and the reason why inflation was up and a little bit sticky last time, is because of oil prices. Oil prices, as much as it's frustrating because there's when the prices slowly go down, it takes ages for it to show up on the forecast. When prices go up, boom, they're up the next day on the forecast. It is a frustrating situation that does happen, and that does happen. But at the moment, this inflation environment is a little bit sticky. And oil not staying flat or going down, but actually going up, is probably not going to help that situation. And if inflation stays a little bit sticky, what that will mean on the US is inflation rates don't come down. Now, partly, one of the reasons why we've had such a good rally in the stock market this year is because people have gone, inflation is going to be cut, interest rates are going to be cut 2-3 times this year. Now, the problem is that as the year's going on more and more, we're looking at this inflation number and we're going, hold on, if it doesn't get to that 2% range, are we going to see these cuts? Are we seeing the prediction of 2-3 cuts get later and later in the year? And if it carries on going on more and more, we're probably not going to see those interest rate cuts happen. And then the market that's had this rally all of a sudden goes, oh, this isn't good because we thought we were going to get the cuts. And even though a lot of the big market caps will probably be okay, a lot of the big market caps aren't very sensitive to inflation and the interest rates, because for them, they don't really take that much access to capital. A lot of them are very well established companies with a lot of cash, a lot of profitability. So they aren't that as sensitive to the interest rates. What will be the more impacted, and especially for me, because I invest in a lot of these, I invest in a lot more smaller caps. The reason why is that smaller caps, normally you can pick those up and coming gems that potentially have the ability to more 4x, 5x stocks, with them being a lot smaller disruptive companies. That's what I personally like to invest in a lot more. Is that what we've seen at the moment is they've lagged massively behind the S&P 500 because they're a lot more sensitive to inflation and interest rates. So unfortunately, this is probably going to impact me a lot more than maybe the lot that invest in the S&P 500, because as well, they're a lot more sensitive to the interest rates. So that's probably the biggest impact that you need to be looking at as an investor. And it definitely will be a little bit of a kick in the teeth if inflation remains sticky and interest rates do stay high. So overall, the message that I would like to say really about this video is that I don't think we'll see a stock market crash. If we do end up having a stock market crash, then if anything, as always, it comes a buying opportunity. So maybe we do want a stock market crash, because I'm sure most of you that have seen the rewards of buying in the COVID dip and buying in the 2022 stock market crash, I'm sure most of you have seen the rewards from buying on that dip. So as long as you've got a bit of cash on there, and that's why I've also been trying to build up a bit of cash pile recently. Then you probably happy. If the market does go up from here, you're probably happy because you're still going to make money. If the stock market goes down from here, you're probably going to have the opportunity to then go buy more things and make money. But I think overall, the thing that's probably going to be the biggest correction here is that I think we just need a break, and I think this is the news line to cause a bit of a break in the share in the stock market, which is needed. We've had a fantastic start to 2024. I think I'm up a good amount this year, and it would be healthy for the market to have a break, and this might be the reason that we look for a headline to cause the break in the stock market, and I think this is very healthy. But I think the big thing that we as investors that we're probably looking at is the impact that oil situation and what that could have on inflation. I think that's probably the biggest knock-on effect that we probably will get from this situation that we need to be looking out for. But overall, like I said, I think the big thing is not to worry about it. We've seen before big events, major events, that the stock market recovers from 100% of the time. And as well as that, I think we're due a break, and the biggest impact that I personally see would be more inflation issues more than anything. So we'll keep an eye on it. But I would say, don't worry. I said the key thing is, as always, as an investor, is the long game. If you're not investing for a 3-month time period, why are you worrying about this? If you're investing for a long period of time, 3, 4, 5 years, as you can see here, these sort of things really are kind of things that you look back at in a few years' time, and they'll be added to this chart, and you go, I forgot that situation happened, and how the market eventually brushed it off, and we rallied to 52 week highs, and that's probably the big thing you need to remember anyway. Hope you enjoyed the video, guys. Have a great week. See you in a bit.